loop-de-freaking-loo. Here we go, loop-de-loo. Here we go, loop-de-la. Here we go, loop-de-loo. All on a Saturday night. Oh! All right. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by... Ooh, let's try this again. Let's actually do one of these thingies. And here we go. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, bringing you a simple, safe, predictable, and consistent 1% per week. Now, simple rules. Rule number one, never buy something you do not want to own. If you do not want to own it for the long term, don't buy it. If you can't imagine yourself buying something and just holding on to it, regardless if it goes down, if it goes up, no matter what it does, if you're not okay with owning it, don't buy it. Rule number two, never sell at a loss. It just doesn't make sense. Well, the name of the game is to buy a stock, wait for it to go up, make a profit. Whatever strategy you use, that's totally up to you. Now, rule number three, make sure the company is consistently profitable. What do I mean by that? Well, there's 9,753 companies available at this moment in time to buy. It's a lot to go through. Well, you got two choices. A company that takes their profits and put it back into the company for capital growth. If that's what you're looking for, you're in the wrong place. That's not what we do here. What we do here is group number two, those companies that have consistently increased their dividends. Now, a dividend is a portion of the company's profits that they give back to you, the investor. When you buy a company's shares or company stock, however you want to look at it, you are part owner of that company. You are entitled to a portion of the profits. So if the company is consistently profitable, well, then it makes sense. It's actually common sense that if the profits increase, so do the dividends. So if the dividend consistently increases, so does the profits. So here's the only companies that I look at. The Dividend Kings. 50 years of increased dividends. There's 54 companies. 54 companies are dividend kings. It's 5 decades or more of increased dividends. Well, great. List number two, the Dividend Aristocrats. Excuse me. Companies that have consistently increased their dividends for more than 25 years. Consistently, year after year after year. Okay. List number three, the Dividend Champions. 150 companies that have continuously increased their dividends for more than 25 years. Similar to the Aristocrats, but less rules and restrictions. About 150 companies consistently more than 25 years. List number four, the Dividend Contenders. The Dividend Contenders, companies that have increased their dividends between 10 and 24 years. There's about 300 of those. So you take those four lists. Oh, let's throw in one bonus round. Ding, 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 ding. Bonus round. Why not look at Warren Buffett's stock list for the year? Okay, he's a halfway decent trader. Let's see what he has. So 5 lists. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Between those 5 stock lists, should give you about 300 companies that have consistently increased their dividends every single year for right around 2 decades. That's what I'm looking for. So out of the 9,753 companies, only about 300 make my list. They're consistently profitable, more than 2 decades of increased dividends, and rule number 4, they must have weekly options. I'm looking for a safe, simple, predictable, consistent 1% per week. I need to have weekly options. Okay? I only talk about here the call option. basically I'm looking at the covered call. Where I buy the stock, I sell the covered call. One of the safest strategies there is. That gives me roughly 1% or more every single week. That's more than 50% a year. Now, you might think I'm sitting here looking at my computer all day long. Nope, not at all. I just take a look who's getting ready to pay their dividend, because I have found in my 20 years of trading that when a company who pays dividends gets closer to the dividend date, the stock has a tendency to go up. So if the stock goes up, a simple, safe, predictable trade, the covered call, will give me a nice 1% every week. And it only takes me about 5 or 10 minutes a day. That's why it's called the 10-minute trader. Anyway, if you don't take my word for it, take a look into Google and actually do a Google search of me, the 10-minute trader. See how long I have been doing this. All right, anyway, that being said, this is James from Dividend Stock Talk. You guys have a great day. Remember, a simple, predictable, consistent, safe 1% per week. That's what I'm looking for. You guys have a great night. All righty. I think that was a pretty cool video. This is James from Dividend Stock Talk. It goes for you guys too. Yeah. Thanks for joining in. All right, let's take a look at actually what's going on tonight. I have to do that my commercial break. All right, what do we have here? All the way back to the beginning. Amy, JS, what's happening? Brigido, cool beans. James, how are you? Alejandro, que pasa, amigo? KG, what's happening? Golden year. Not quite sure what that means, but okay. James Vale, happy New Year, happy day, good evening. Amy, hi. Rich Bruner, he beat you, Jill. Sorry, Rich beat you tonight. You were on a roll at the beginning of the week. You were getting here quicker than he was. Now he's jumping in. Well, let's keep on going. Mark, how you doing tonight? Travis, Shaji. Travis, Hector, Pickman, Nell, James Vale. Okay, encourage, cool. Like, share, subscribe, all that kind of nice, neat, fun stuff. Here is my Monday list. Paramount, cool, over 2% with flat seasonality. KG, cool bean. You know what? Let's take a look at Paramount right now. After that, I'll go to the rest of the questions. Now, I want you to know it is going to take me a while to get to all the questions because I have a bunch of different cameras going, which means I have a bunch of questions. I will get to your question before the night is over. I promise you that. But work with me here a little bit, okay? I do have ADD. It means I lose focus real quickly. I do. It is what it is. Okay, I don't mind. All right, makes life interesting and fun. All right, Paramount. We are going to take a look at Paramount. Let's take a look at Paramount right now, and then we're going to go back to the rest of the questions. So Paramount. Here we go, because I like Paramount, and it is on the list for next week. Do you know why Paramount is on the list for next week? Because it's on Warren Buffett's list. If it's good enough for Warren, hell, I want to take a look at an opportunity if it's there. Okay, if you're new here, just give me a minute or two. You'll catch on rather quickly. I don't, what do they call that nowadays? Gatekeep? I don't gatekeep anything. I walk you through the whole thing. You know, it is what it is. Let's take a look. All right. Paramount. A year ago, we were at the high at 1766. That was last December. We got our bottom, looks like in June, 958, right in the middle of June. Cool beans. Look at the last 30 days. Last 30 days is what I want to see. Now, the reason I want to see the last 30 days is because the last 30 days gives me a good idea of where I think it's going to go next. Because think about it. You can only have one 30-day high, because we're looking at the 30-day period. Remember, because we look at the 1 year, we look at the 90-day, we look at the 30-day, and then we look at the seasonality. Okay, I'm going to get to the seasonality in a minute, but let's take a look at the 30-day chart. The 30-day chart, you can only have one 30-day high, and that's right here at 1160. And then you can only have one 30-day bottom, which is right here. Let's call it 1025, something like that. Okay. Now, what does the stock normally do in a 30-day period? Now, a 30-day period is only 4 weeks. Okay, that was last week. Well, what happened last week? Well, that's right here. What happened the week before? That's right here, and then the week before. We want to get a good idea of what the investors are thinking. Okay, so 30 days ago, we're at 1070, and she shoots up, makes a 30-day high. What happens after a 30-day high? Well, most people start taking profits. Well, if you start taking profits, what's going to happen to the stock price? It's going to drop. And when it gets down to the 30-day bottom, okay, you can tell the way I figure out a 30-day bottom is 2 days to the upside. That's me. You have to figure out, now, don't listen to a word I say, but think about what, that makes no sense, okay? I'm not an expert, have no degrees, but what I'm saying is do your own due diligence. I'm going to show you what I look at. You figure out what you want to do. Because remember, this is your money. Okay, we're the only species on the planet that has to pay to live here. Okay, you work for however long you have to work to get that golden amount that once you invest it, you don't have to work again if you don't want to. It is really cool feeling. Really, it is. I'm 60. I'm already retired because I have enough money set aside that I get 1% every week. Now, 1% is like a 50%. So if I had 100,000, 1% a week is 50,000 a year. Great. You figure out your own taxes. Tax strategists would be perfect for that. But think about it. If you could find a simple, safe, predictable, consistent 1% per week trading strategy, why wouldn't you take advantage of it? Well, a few years ago, not a few years, listen to me, a few years ago, really? Okay, 15 years ago, when my daughter was 9 years old, she jumped on my lap and said, Daddy, what are you doing? Can you teach me? Okay, great. Well, here's what I came up with. Now, I was trading stock market back then, so if she wants to do it also, I'm going to have to figure out a strategy specifically for her. Simple, safe, predictable, consistent, and no way for her to lose. That's the challenge that I had. I had to come up with a strategy that met that 5 criteria. Okay, so here's what I came up with. Rule number 1, never buy something you don't understand. If you don't know what it is, if you don't know who they are, if you can't give a 3 or 5 minute pitch as to why you bought them and why you think they're a good fit, then don't buy them. If you don't want to hold it for the rest of your life, don't buy it. You have to really like the companies that you buy. That's why I only buy certain companies. You probably heard them. IBM, Lowe's, Home Depot, Procter & Gamble, Bank of America, Wells Fargo, Capital One Finance, ExxonMobil, ConocoPhillips, companies that we grew up with. I grew up with these companies, the 60s, 70s, and 80s. That's when I grew up. I know all these companies. Those are the only companies I buy. I don't take a risk on the new, I don't want to call them fly by night, but you have to pay your dues at some point. So if you invest for a long period of time, you get better at it. Same with a company. If a company is consistently profitable year after year after year, that's someone I want to give my money to. So most of the companies I invest in, you probably heard of them. That's why I invest in them, because they're safe. All right, anyway, so I'm looking for a simple, safe, predictable, consistent 1% per week. How do I do it? Well, I look at the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. After I get that list, I then take it and I put it in to the dividend calendar. Now, an EX dividend calendar you can get almost anywhere. You can go to Google, do a search, EX dividend calendar, and you have a whole bunch of opportunities pop up in front of you. This company has one, this company has one, this company has one, this company has one. Well, I do most of my trading on Thinkorswim, which is with Charles Schwab. I don't get any compensation from them, so that's not a thing. Okay, I like the website. I like the trading platform. It has everything I need. Now, 15 years ago, I wrote a book on choosing the right trading platform. I think that was the name of it. It was 15 years ago. I'm getting old. Give me a break. Anyway, so once you find out the stocks you like, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, and you put them into the calendar. It tells you exactly when they're paying their dividend. Why is this important? Well, it's important because just before the dividend is paid, the stock has a tendency to go up in value. Now, we will take a look at the charts of the companies that we like for the upcoming week, and you'll be able to see, because it's something that's called, hold on a second, called, I want to say flow trend. That's the word I was looking for, trend. Because as the stock is trending, whether it's trending to the upside or to the downside, you got to remember one very important thing. When stocks go up, stocks go down. That's it. They don't come to your house and wash your dishes. They don't take the dog for a walk. They don't take out the trash. They go up, they go down. That's all stocks do. Okay, so understand the mentality of the people buying it. If the stock is going up, let's get out of this for a second. That's just the calendar. It tells you when they pay their dividends. Let me go to what I'm trying to say right now. Let's go back a little bit. Okay, it's almost plain to see. Stocks go up, stocks go down. They go up, they go down. They go up, they go down. They go up, they go down. That's all they do. So if you like a good stock, a good company, for me, it's pretty definite. There's 300 companies that I like, consistently increasing their profits and weekly options. That's the only two criteria. That's it, just two. Consistently profitable, because it just makes freaking sense, and weekly options. Well, because I want a weekly paycheck. Okay, I grew up in the 60s, 70s, and 80s. We went to work 8 o'clock in the morning on a Monday. By Friday afternoon, we got our paycheck. I want the same thing. Weekly options gives me that. I buy it on a Monday. Okay, I sell the option through a covered call on a Monday. I just look on Tuesday, Wednesday, Thursday, Friday. Well, Tuesday, Wednesday, Thursday. Tuesday, Wednesday, Thursday. Friday is big day. Monday and Friday are the two big days. Reason being, I do my buying on Monday. On Friday at 4 o'clock, the options expire. That means if you're going to do something with an option, you got to do it by 3:59 Friday afternoon, or it becomes worthless. 80% of all options, stock options, expire worthless. So why do I want to buy them when I would prefer to be on the 80% side? I want to sell them. So if I buy a stock, sell an option, giving somebody the right, not the obligation, to buy the stock from me for basically the exact same price I just paid for it. Why do I want to do that? Well, I'm not looking for the stock appreciation. Hold one second. I'm looking for the option premium. This is a horrible one to pick. But anyway, I'm looking for the option premium. Because if I buy it at the current price, at this moment in time, and the chart is telling me that the bottom is here, and now, after profit taking, here's the bottom, this is where it turns around and goes back up again. The chart is telling me it's hit the bottom, turns around, goes back up again. Well, it has all the air marks of a safe, predictable, consistent trade. Okay, number one, they get the dividend coming up. Well, that's what I'm looking for, because stocks usually go up just before the dividend. Number two, well, you can get a third grader to take your finger, Tommy, and trace the line. Down, up, down, up, down, up. A third grader could do that. Come on, seriously. The chart tells you exactly where it's going. Usually. That's the kicker. Because even though it looks like it should be going up, it's a 50-50 shot. That's basically the best that we can do. Number one, pick a company you like. If you don't know it, don't understand it, don't buy it. Number two, never sell for a loss. It doesn't make sense. Don't play the game. Don't do the crime if you can do the time. No, don't do it. Remember that show? Some people will remember it, some people won't. Rule number three, make sure they're consistently profitable. Believe it or not, it shouldn't be Rule 3. It shouldn't even exist. It should be common sense to never buy some company that's not profitable. That should be common sense. But you'd be amazed. Some of the stocks that people ask me to take a look at it. And I think to myself, what the are you thinking? Anyway, let's take a look at something else, because I could go down that rabbit hole for almost forever. All right, where were we? Here's my Monday pick, Paramount. I already took a look at that. Good. All right. What's up? Alrighty. KB, how you doing? BBY, 1.7% with a good seasonality. KG, let's take a look at it. BBY, you're new to the trading group, so I'm kind of curious what kind of pick you got. BBY. You do realize, okay, not to put you on the spot or anything, but you can never make a first impression twice. So let's see what you got. All right, here we go. BBY. All right, a year ago, BBY was at 70.25. The bottom was the middle of May at 69.30. Look at the top right here. Uh-oh, I hate when I do that. But it does happen. I do hit the wrong button once in a while. That's why I tell people you're going to lose most of your money by hitting the wrong button. It happens. I've been trading for 20 years. I think 4 times this year I've hit the wrong freaking button. Anyway, all right. So here we are, BBY. Here's the bottom right here towards the end of May, and that was 68.80. Here's the double top. Check that out. 103.66. Hits it once the end of August and hits it again the end of September. From there, she just drops, finds a new bottom. Missing one day, Monday, Tuesday, Wednesday. No, wait a minute, is that right? Last 30 days. Here we go. Last 30 days. Here we go. Last 30 days. We're at 90. She jumps up to 94, drops all the way down to 86, shoots up, pulls back. 30-day high right there at 96, 30-day bottom right there at 83. Now, 2 days to the upside. I love 2 days to the upside. But here's the thing. Number 1, does it make sense? Number 2, do I like BBY? Okay? Do I like Best Buy? And do I like it at this current price, $90? Is that right? 90 bucks? Yeah. The $90 call strike is going for $129. Well, what does that mean? So $129. Well, let's do a little bit of math and let me see if you understand it. So I like the $90 call price. So let's see what it looks like. Let's get rid of this. Let's go to covered call. Now I like the covered call because it's one of the safest trading strategies it is. You buy the stock that you like, check all the boxes, make sure that you buy the stock that you like, and then sell it to somebody else for the same price you just paid for it, and then you collect the premium. If the premium is more than 1%, well, great. 1% a week or more is more than 50% per year. Who the hell gets 50% per year? Really? Well, I do. Anyway, I sounded kind of cocky, didn't it? Anyway, the $90. Okay, $90 right here. Okay, when you bring your cursor over to the number, a little tiny square will pop up. It says buy. So if you hit the wrong button, you'll know it pretty quick. Okay, I want to buy the 90s. There we go. Just one contract. Now, one contract is buying 100 shares of the stock, selling one contract, one call option for the right to buy it anytime at $90 between Monday morning and Friday at 3:59 p.m. because that's when it's going to expire. Is it going to increase in value? Is it going to stay the same? Is it going to go down? It's a crapshoot. Remember, 80% of all options expire worthless. So I don't want to buy it. I want to sell it. I want to make sure that 80% of the time I'm making money. All right, anyway, besides that. So here it is. Let's take a look at what it sounds like. You ready? Buy one covered call of Best Buy. 6 December 24. Now remember I told you that the options expire on a certain date. Well, this is a weekly option and it expires this coming Friday. The $90 call strike, if the stock right now is at $90.10, well, the closest strike price, if I'm going to buy it at $90.10, I want to sell it at $90 because that's the closest strike price. Now, I'm getting a nice premium to the tune of $151 per contract. So each contract I do, 1, 101, 1,001, it's all kind of tied together. So the more shares I buy, the more premiums I collect. But the percentages are always the same. What's your profit? What did you have to dish out? What kind of profit is that? Well, let's check it out. $151 is the maximum profit. Remember when I say simple, safe, predictable? I want to know what I'm going to make every week before I do it. I'm looking for just 1%. I'm not greedy. See, I see stocks go down, they go up. Great. I want my 1%. I get it every week. It's a pain in the butt because it's the same thing week after week after week after week. But I've been doing it for 20 years already, so it is what it is. I'm just taking you guys along for the ride. You know what? It's time to share the knowledge. All right, that being said, the maximum profit is $151 per contract. Let's get out the calculator and find out exactly what does that mean. So, 151 is the profit. Okay, see the calculator? 151 is the profit. Then I divide that by, well, what is one contract? Well, one contract is 100 shares. Well, what's that going to be? 8,849. 8,849. And that comes to a grand total of 1.7%. Now, it may not sound like much. Number one, it's simple, it's easy, it's predictable. I know what I'm getting. Okay? Now, the question is, there's a couple of questions. Number one is, do I understand it? Does it make sense? Question number two, do I like Bed Bath & Beyond? Question number three, do I like Bed Bath & Beyond at this current price? Am I willing to hold on to it until it hits my target? Well, what's my target? Well, if I'm buying it at $90.10, the closest strike price is the $90. Now, you say you're losing 10 cents per share. Yes, but you're making it up in the premium value. You just deduct 10 cents off the premium, then you do your math, and that's what your rate of return is. I'm looking for a simple, safe, predictable, consistent 1% per week. This one fits the bill. For me, you have to figure out what's right for you. I don't give tips, I don't give advice. I read numbers and I give you my opinion. My opinion is, this works for me, and I like Best Buy. It's actually that simple. Does it make sense? Question number one. It's like, if you don't like Best Buy, don't buy it. All right, let's get out of here. Let's get back to where I was, and let's take a look at another stock. All right, so let's move this over to here, and let's go. Your hair looks great. Thank you, Amy. Nobody, Zim. Now, we looked at Zim last night. Zim, I don't believe, has any dividends. Let me quickly take a look. ZIM. Now, I like to use Yahoo Finance. At some point in time, you are going to need to find some place to get your data from, some place to get your information from. I don't pay too much attention to it because most of the companies I buy are the Dividend Kings, Dividend Aristocrats, Dividend Champions, you know, the 5 list. All right, so let's go to historical data because I want to see how often has Zim paid out their dividends. So go right here to historical prices, slide down, drop down to dividends. Okay, so 2 dividends. Wait a second. Let's see the maximum amount of years. There we go. Oh, there you go. 21, 22, 23, and 24. 4 years. Yeah, no thank you. Okay, terribly sorry. Now, when I invest in a company, I want 2 decades of consistent profit increases, which means the dividend has to go up at least 2 decades. Because if you're consistently profitable, the the shareholders, me and you, okay, we get a portion of those profits. Ask yourself the question, do I want profits or do I want capital growth? Why Apple not $500 stock? Please explain. Terribly sorry, dude, you're asking the wrong person the wrong question. Why Apple's not at $500? I really don't know. Because, how about this? Here's a good answer for you. Because we, the buyers and sellers, don't think it's worth 500 bucks. Because we are the ones that make up this mess. We say when it's too high. We say when it's too low. We say when to buy. We say when to sell. So we, okay, me and all of you, make up the dollar amount of the value that we think the stock is. That's us. So why it's not 500 bucks a share? Because we, the people, don't think it's worth $500 a share. I think that's the best question, the best answer you're going to get. Alrighty. Next. AIG. Ooh. Let's take a look at AIG. Alrighty. First thing I always want to take a look at. Where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? And take your little finger and draw on the line. Up, down, up, down, up. So she's going in an up phase at this moment in time. Now that's the 1-year chart. It doesn't look that bad to me. You guys got to figure your own out. But to me, it doesn't look that bad. Next, I want to take a look at the numbers. I can buy it tomorrow morning, Monday morning, $77.14. That's the current price. So the closest strike price, because remember, I like stock options. I sell stock options. I buy a stock, sell the option, collect the money. But Apple got all the people. Okay, trade. Okay, dude, if we the people don't think Apple's worth $500 a share, then we just don't think it is. Wait a second. He's asking, why wouldn't you buy Apple instead of what you're doing? Oh, that's a good question. Why wouldn't I? Because Apple doesn't pay weekly dividends. I mean, it does, but I'd have to trade it. I have to buy it, sell the option against it, do a covered call, do a calendar. There's a lot of things I could do. But when the numbers work, yeah, I'll take a look at Apple. Hold that thought. AAPL. Okay? Take a look at it. The high, it's close to the high now, 230, 237. The low, what is that, 160? A year ago, we're right around 195. Okay? So what has it done for the last year? Down, up, down, up, down, up, down, up, down, up. That's the movement that the stock has been making. Now the news keeps it down here, and then the news pushes it up here. Hold on a second. We meet yesterday. Hello. Rack, Own, how are you today? So, the stock keeps moving up and down, up and down, up and down. Well, great. If I buy it a year ago, it's at 195. Now it's at 237. So if I bought it, it would have went up 10, 20, 30, 40 bucks. Now $40 on a $200 stock is about 20%. So the stock went up 20% from last year. Okay, are you hearing the numbers? From last year's price to this year's current price is only a 20 some odd percent return. Okay, that's it. That's for buying it and holding it. What if I traded it? Now, if I get 1% every week, Well, 52 weeks is 52%. But 52 weeks compounded is 62%. So if I had it a year ago at this price, and I did absolutely nothing but covered calls and got only 1% every single week, well, 52 weeks compounded 1% per week. Now, understand I do sometimes make more than 1%. Sometimes I make less than 1%, but it averages out more than 1% every week, the average. So if I was going to do that and compound it every week, that's 62% increase. Yeah. I make only now market structure and valid point on trade, but I know I read and learn numbers. Okay, great. Okay, hang in there, you'll get it. So what was I saying? Oh, so rather than buying it and holding it, I trade it and I make 1% a week if and when it's the right time to buy. Because I don't buy at the high, and I don't buy at the high. I wait for it to bottom out, turn around, go up, and I'm only looking for 1% every week. 1% every week is 62% compounded. Let's continue. Where was I a minute ago? AIG. Okay, so AIG a year ago was at 66. Shoots on up to the high of the year. Looks like 85. Back down again, back up, back down, back up. Currently at 76.88. Currently. But I can buy it at 77.14. The 77s are going for 75. Not quite 1%. So the question you need to ask yourself, do you like AIG enough to buy it at the current price, 77.14? Sell somebody the rights to buy it from you at 77. Okay, first off, you'd lose 14 cents. You deduct 14 cents out of there and you're walking away with 61. 61 cents on a $77 stock, it doesn't make 1%. So as much as I like AIG, even if the chart tells me, and look at it, it's going to the upside, great. Even if it's saying that, if the numbers don't work, no thank you. Okay, numbers don't work, no thank you. Ooh, got a good question here, Raccoon. Show me on the right side of your TV what number there are. Is because I think maybe we misunderstand what each. Sorry for my English. Don't worry about that. I get the gist of it. I've traveled the world, not every place, but enough. Sorry for my English. I'm from Europe. Can you zoom in on the right side? Okay, you're under the impression I know what I'm doing. Terribly sorry, dude. Okay, Rack, terribly sorry, dude. You're under the impression that I know what I'm doing behind this keyboard. No. I know how to buy and I know how to sell. Do I know how to use the software? No, not really. That's why I have 7 cameras. If I knew how to use it, I'd use one camera and then a splitter and go to air. Yeah, that would be so much easier. Yeah, sorry. All right, AIG, okay, over 1%, but with higher price. Let's look at the last 30 days for AIG. Okay, 30 days ago, we're here at 75. Well, I got to open this up a little bit. Hold on. Just hold on a minute. Before we go much further, give me a dime so I can call your mother. Oops. All right, 30 days ago we're at 76. Our bottom is right around 74. That's the bottom for the 30-day period. Then she shoots up, makes a 30-day high, one right after another. 30-day bottom, 30-day high, one right after another. Okay, anyway, from there, she drops, challenges that bottom again, back up. Down, up, down, up, down, up. So now it's going to the upside. Okay, that's even simpler. The 30-day high is way up here, almost at 79.50. But right now, she's only here at 76. So the stock still has plenty of room to keep continuing on the upside. because a stock will trend in one direction. That's where they got that old saying, the trend is your friend right to the end. Because as it's going up, it's going to be your friend all the way up until it stops and turns around, goes back down. It's your friend. The trend is your friend right to the end. All right, anyway, got a question over here. Third trade day, there is no something like this. You must know that by now. Oh, okay. I appreciate that. Thank you. What about reversal trading? Ooh, that's a good idea. However, now, Rack, when I say I teach one trading strategy here and only one, I'm a nice guy, but I got to draw the line somewhere. It's a simple, safe, predictable, consistent 1% per week. That's over 50% per year. Yes, I have plenty other trading strategies, but this is the only one to give away for free. Now, I do have a trading group that meets every morning, Monday, Tuesday, Wednesday, Thursday. Friday, we meet 2 hours before the market closed just to make sure everything's in the right place. But well, let's get back to what we're talking about. Okay, DG Premium, was that last week so high? They were always that high. Okay. Would you mind predicting XRP? No. XRP is not a dividend stock. Uh-oh. I missed a bunch of questions. Let's back it up. Back it up, buddy. Gonna shut you down. Where was I? Ugh. QILD. Come on. Really? RPM. Wow. I missed all these questions? Holy shit. Sorry, guys. I'm trying to scroll back to the beginning. Okay, there we are, right here. I've seen that. Okay, here we are. PHM. Dallas Gums. I am a paid member for several months. However, I am not getting... Uh-oh. I can't see the rest of that one, dude. I'm trying to read it. Where is it? Translate. That's funny. However, I'm not getting... All right, dude. Leave your number here. Okay? I will give you a buzz in the morning. Okay? We'll chat one-on-one. Well, wait a minute. Well, how you doing? Alex, how are you today? Oh, Merck. Okay, here we are. AIG. PHM. Only 1%, but good seasonality. PHM. Uh-oh, Rack. Okay, I use M as market structure on 1 hour, 15 minutes, take a sniper trade for like 4 hours. Yeah, dude, you're definitely in the wrong place. Okay? You're talking about day trading and those kind of neat things. Yeah, I don't do day trading. Trading psychology, nothing changed. Yeah, I get it. I understand. Not what I'm looking for. I'm looking for a simple, safe, predictable trade. That's what I'm looking for. I don't want any complications whatsoever. And when I say this trading strategy was created for a 9-year-old, 9. Okay, she was 9. She was not a Mensa student, if you know what that is. Didn't make the honors roll. Perfectly fine. She's perfectly normal teenage girl at the time. Man, she was a preteen. She was a preteen. Yee. Anyway, it's so hard to think about it because she's 25 nowadays. Like, holy crap, stop getting older. Anyway, as I was saying, simple, safe, predictable, consistent. Once you just start describing all that stuff that you want to see, it no longer becomes simple. Okay? Adults have a tendency to make this more complicated than it needs to be. So let's go back a little bit. Simple, safe, predictable, consistent. So you see the market structure, it's... What kind of strategy do you use? Okay, Rack, I use dividend caption. You've been here for a while. I buy a good company. I sell somebody the rights through a covered call to buy it from me. I make 1% every week. That's what I'm looking for. I don't want to complicate things. Okay, now, you are absolutely correct with what you're talking about. You are, and I admit that. However, why fix something if it ain't broke? I use a risk reward like 70%, 5%. Yeah, I get that. And that makes perfect sense. The strategy wasn't created that way. This trading strategy was created for a 9-year-old. Make sure the company's profitable. Make sure they have weekly options. Make sure you buy it at the right time based on simplicities of Pavlov's dog. You know, people buy at low, then as it goes up, they sell and take profits. Once they sell and take profits, the stock goes down. Once it gets down really low, people say, "Ooh, that's a good buy. Let me buy some." Then it goes back up again. That's all they do. They go up, they go down. They stop complicating it. It's a simple strategy. I use fundamental analysis to a certain point. Okay, is it a good company? Before I even use fundamental analysis, let me see if I can really simplify this for you. Really simplify it. 2 criteria and only 2 criteria. Are they consistently profitable? I want 20 years of consistent profits. Now there's 9,753 different companies. If out of that 9,753 companies, I can find a few of them that are consistently profitable for more than 2 decades, that means every year they share more and more profits. That's my criteria. Simple, safe, predictable, consistent strategy is a covered call, which is the simplest, safest trading strategy there is to make a consistent 1% per week. That's what I want. I just want 1% per week because I'm past the stage in my life where money is my main focus. I'm just looking for enough to pay my bills and progress just a little bit. So as my bills are getting paid on a consistent basis, my account is growing very slowly. And I use the same strategy week after week after week after week. Buy a good company. So what is your risk management? I don't have risk management. Okay? My risk management is never buy a company I don't know or don't understand. If you don't know it, if you don't understand it. Now, AIG, they're an insurance company. Hold on a second, what is that? Okay, listen, you might learn something. Thank you for that, sir. Now, as I was saying, to me, it just doesn't make sense to put my money into a company that's not consistently profitable. Now, there are a lot of companies that are profitable. Okay, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 years, 15 years. Okay, great, wonderful. It's just my personal preference. 20 years, 2 decades, consistently increasing their dividends, consistently profitable, and weekly options, because I want a weekly cash flow. I mean, that's pretty simple, right? I grew up in the 60s, 70s, and 80s. We went to work as a society at 8 o'clock Monday morning. From 4 or 5 o'clock Friday afternoon, we want to get paid and we want to go out and enjoy the weekend. That's the way I grew up. That's what I want. Weekly options give me that. I find a good company that I like. I buy it at a nice price at the right time. The right time is as she's coming down from a 30-day high because of the profit taking. Yeah, you're right, 62% compounded. Okay, so that's what I want. Weekly cash flow from a good company. If I have to hold it longer, I will. I don't mind. Doesn't make sense to buy something you're not willing to hold on to. What question do we have? You don't know that. I learned by my own and what will be trading, blah, 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 blah. Okay. There you go. Like I said, if you want more than 1%, you might be in the wrong place because I'm not looking to grow my money, okay? See, I'm not looking to buy a stock and have it go up higher and higher and higher. No, I want simplicity, consistency, predictability, and simple, safe, predictable, consistent, okay? As long as I'm getting 1% every single week, it's kind of like a game for me. Remember playing Monopoly? Okay, go around, get 4 houses, 1 hotel, 4 green houses, 1 red hotel, 4 houses, 1, and then eventually it's just a game. Okay, you're taking your money, you're doing 1 or 2 things. There is no third. Okay, 1 or 2, heads or tails, yes or no, up, down, left, right. There's a balance. There's only 2 choices. you invest the money yourself and take responsibility for your own money, or 2, you give it to someone else and you give up accountability. That's what it is. There is no third choice. All right, you can give me the stupid antidote. Well, I can put half of it and do it myself, and the other half I can give it to someone else. Yeah, you could do that, but you're still giving your accountability to someone else for the other half. However you want to look at it, it is what it is. Left, right, up, down, dark, light. You do it yourself, or you give the responsibility to someone else. There is no third choice. Okay? I'm hoping that's what you're here for. It's a simple strategy created for my 9-year-old. Now, some of you have never met her, so let me introduce you to her. No. Wrong button. See, I do the wrong button more than once. That's not it. Where the hell? Oh, there it is, right there. Okay, I'm going to introduce you to the little princess. Go to YouTube. Oh, that was all those little black dots. Those were all my social media sites. I actually have more than that, but this website doesn't have that. All right, so anyway, videos, the 10-minute trade. That's my website. My YouTube website. You can look at some of the videos. They're over 15 years old. I've been doing this for a while. Videos, oldest. Here we go. This is one of my favorites. Uh-oh.
That, but I do.
Gotta rewind it.
And you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting for over 20 days.
That's me, 15 years ago. Look at all the hair.
What does that mean? That means every single day you can buy a different stock. Every single day there's
What do you say?
a company paying out dividends. Anyway, no, seriously. By picking just one company per month, just one. January, February, March, that's 12. 12. You can buy 12 different companies.
Well, that was the princess. And that was like 15. Simple, safe, predictable, parquet. Yeah. What am I missing? Oh boy. What do you mean, what are you missing? Simple, safe, predictable. I didn't say profitable. Okay? Simple, safe, predictable, consistent. That's what you're missing. What was the other question? Oh, can be Forex commodities. Yep. Okay. So let's go back, take a look at some more questions. That's my favorite. That one's funny as hell. I think that's funny. All right, let's go back to where we were. Well, how are you doing? I'm doing great. Thank you. Mark, good evening. Oh, look at that. 10 past 11. 10 past 10. Oh, we still got an hour and 15 minutes. Mark, how's WBA doing? Ooh, Walgreens. Didn't we take a look at Walgreens last night? WBA. Funny thing is that not much, actually, absolutely nothing changes between a Friday night and a Saturday night. Zach, you want to debate? Oh my goodness, I'm really in no conditions to debate at the moment. I had a nice day today, got a lot accomplished. I feel good about myself today, so we're gonna share what we can share. Okay, I will look at what you want, but I don't want to debate. Not tonight. Maybe another night. Because I might find myself saying something that I'm going to regret later on. All right, so we're taking a look at Walgreens. Okay, here's the high, here's your low. She goes up, she goes down. Okay, Walgreens hasn't been this low in almost a decade. Great, well now it's at the low of almost a decade. I don't know the exact year, but I know it's over 7 years. So it hasn't been this low. So you're going to make most of your money in the stock market buying low and selling high. But here's the thing, with a company like Walgreens, look at the drop. That's a big drop. And it found the bottom right down here. So what happens at the bottom? Stock has no other place but to go up. So let's take a look, see what it looks like. A year ago, Walgreens is sitting at 1987. The high of the year 24.14, and that was the late December of last year. From there, she drops. Look at the last 90 days. This is the last 90 days. Okay, down, up, down, up. You know the routine. Down, up, down. Here's the bottom right there. And what is she doing at that bottom? She's bouncing off of it and going back up. You get to a certain low. Now, we took a look last night at the book value for Walgreens. The stock price right now is at $9. I believe, you know what, let's just take a look. Because I don't want to say a number and then people call me a liar, you know. This is not debating channel. He's not doing this before you were born. Oh, thank you for that. Shit, I forgot what I'm doing. See that? I have a tendency to forget things. We were going to do something and I forget what it was. All right. Let's go back to where we were. Walgreens. All right. So 30 days ago, we're at $9. We drop, shoot up. Here's your high. Then she drops down. There's the bottom right there. What usually happens at a bottom? Well, you have a 30-day bottom coming off of a 30-day high. What normally happens? Well, normally it's cheap. Book value, that's what we're going to go do. Okay, hold on. I have a basic understanding of a covered call. I'd like to know what choices to make at or before the expiration of the call. Oh, JD Juggler, how are you this evening? That's a good question. It's different for everyone. Now, it sounds like a lame answer, I know, but here's the thing. I don't know anything about you, so I can't really give you a good response to your certain situation. But the overall view is knowing when a stock is going to move is only one part of the equation. What are you going to do with that information? Now, you stumbled here because it sounded interesting. Dividend investing for weekly cash flow. Okay, great. Stocks go up, stocks go down. Stocks go up, stocks go down. That's all they do. If you're going to expect them to come to your house and take your dog for a walk or take out the trash, no, they don't do that. They go up, they go down. That's it. Okay? Buying at the right time, selling at the right time. It's not really an art. It's kind of common sense in a simplistic, way of looking at it. Let's take a look at Walgreens at the moment. Follow along with me. Okay? We're looking at the beginning of September. This is the range of days. Beginning of September until last Friday. Okay, take your finger and just go, look at this. Down, up, down, up, down, up, so on and so forth. That's all they do. They go up and they go down. So if you like a company, rule number one, never buy something you don't like. Okay? If you find a company that you like, take a look at the movement. What is it doing? Okay, you think you're unique? You're not. There's about 1,000 other people out there just like you looking at the exact same information. Okay, we're going to get to the book value. Hold on a second. The book value on Walgreens. But thank you for reminding me. You might have to do it again. So, oh shit. I forget where I was. Isn't that funny? So that's all they do. If you follow the patterns, okay, down, up, down, up, down, up, because we're all doing the same thing. We're all looking at a way to make money with the current money that we have. So we're going to buy a company that we like or that we think is going to make the move. Okay? Up, down, that's all it does. Here's your 30-day high. Here's your 30-day bottom. What usually happens, okay, nothing is guaranteed except for death and taxes, but predictability. I like having all things going in my direction. Odds and probabilities. Well, what are the odds of that it's going to do the seesaw? Down, up, down, up, down, up. How much it goes up and how much it comes down is not really that important. It's the fact that it is moving. Because you have a high. What happens at a high? Well, people who bought way down here at the low, well, they're going to want to take profits. When they take profits, the stock is going to drop. And that's all it does. Up, down, up, down, up, down. You and I, we create this madness. Okay, this is what we think. Well, we think it's too high. Well, let's sell, take profits. Wait a second, it's down here. Well, let me buy some because I like it. Then it goes up, and then it goes down, then it goes up, and then it goes down. Okay, so find a company that you like. Look at it, study it. Okay, 30-day high, 30-day bottom. It hits a 30-day bottom. Wow, it's cheap. Let me buy some. That's what people on the other side of the screen are probably thinking. Well, I like Walgreens. I go to Walgreens all the time and I spend money there. Okay, it goes up, it goes down. So let's take a look at the book value. So right now we know what the stock price is. The stock price is $9.04. So let's go to a finance website, Yahoo Finance, and take a look at what is the book value. The book value is if the Supreme Court's ordered the company to liquidate and pay off all their debts, money coming in, money going out, pay off all the debts and pay off all the shareholders. If you own stock, you're entitled to X amount. What is X amount? That's the book value. Let's go check it out. Right here, and we're looking at Walgreens, WBA. Okay, so here's Walgreens, all the dividends they've been paying. We want to take a look at the statistics. This is statistics, that's kind of like your fundamental information, profits, market cap, that kind of stuff. What I want to look at, right there, book value. The book value for Walgreens at this moment in time is $12.09. So you're buying $12.09 for $9. Well, that's a 25% discount if you think of it that way. If the company is worth $12 and the stock price is $9, well, that's a $3 difference. A $3 difference on a $12 stock, that's 25%. That's a nice discount if you think about it. But here's the thing. Do you like the company? Do you want to own it? If it is, it should be in your roster and you should be looking at it when the time is right. Do you want to look at it here? No. Because you don't want to buy. I don't want to buy it high. Am I looking at it here? No. Once I see it hit there, I'm going to write it into my schedule for 3 weeks. Because I'm going to give it 3 weeks for it to drop and find the bottom. Well, here's 1 week. Here's 2 weeks, here's 3 weeks. Oh, imagine that. Okay, it's not rocket science. It goes down, it goes up, it goes down, it goes up, it goes down, it goes up. That's all it does. Okay, by following a company that you like, it makes it easier for you to be profitable. And holding on to it doesn't make sense because 30 days ago it was at 925. Well, now it's at 902. I didn't make any profit at all if I held it. But look, if I sold it when it dropped, if I bought it when if I bought it when it dropped and sold it when it went up, look at how many times it did it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It did the move 10 times. So it goes up, you sell. That's one. It goes down, you buy. It goes up, you sell, down, you buy. It's that simple. So if I held it, I would have lost money. If I traded it, well, there's like 10 opportunities there to make money. But let's continue. All right, so I do like Walgreens. All right, and I do own a bunch of Walgreens. So I hope that answers your question. Let's go on. Next. Alejandro, greetings. ¿Qué pasa, amigo? ¿Cómo está? Eves, August. Okay, hi. Jill. He may have gotten here first, but I'm still better looking. You are absolutely 100% correct. Sorry, Rich. All right, howdy. Hey, Terry, how are you tonight? Awesome. All right, Sweetie Swag. This system's amazing. I started this month and have already made $600. Thanks. Sweetie Swag, good for you. Have we talked yet? I don't remember. Send me your number. I'll give you a buzz. We'll chat. I love to share your success story. I like to hear it. Okay? It is really cool how you can make... Oh, boy. Hold on a second. There we go. Okay, it's really cool how you can make unlimited income doing this, no risk. Now, Sweetie Swag, I appreciate the compliment, really do. But life has risks. There's risks everywhere. Okay, can you buy a stock and it drop to the floor? Yes, you can. Take a look. You know, you might buy Ford, and Ford might just implode, get swallowed up by the magic bullet theory bullshit. There's always risk. There's risk of doing something. There's risk of not doing something. There's a balance in life. You got to figure out what works best for you. Okay? You're either going to put your money to work, or you're going to give it to someone else and they'll do it for you. Terry, I think Warren Buffett sold all his Paramount stock. Well, I didn't know that. Thank you for that, Terry. I don't know. Even if Warren Buffett did sell his stock, is that a good enough reason to take it off the list? Does it still meet the criteria? Do we still profit from it? Questions you need to ask. Terry, Paramount lowered they lowered dividends a ton. Ooh. Minty Fresh, RPM. What the heck is RPM? Other than revolutions per minute for you gearheads. Hell no. Wasn't that quick? Imagine that. Okay, Minty Fresh, sorry, dude. You've been here before. Okay, I remember the name. You have been here before. Why are you giving me a company that has monthly options? If you've been here before, you know I don't do monthly options. Sweetie Swags. Kohl's didn't sell this week, but I will sell again next week. Still got the premium. No way to lose. Sweetie Swag, that's the idea. All right, let's take a look at Kohl's. Now, I do have Kohl's. Okay, let's take a gander. A year ago, sitting at 24, hits a $30 high, drops back up, back down, blah, blah, all that kind of neat stuff. Nice, neat stuff. Here's the bottom right here, right around 14. Well, let's take a better look. Before we do it, let's take a look at the numbers. What am I buying it for? Currently, the price is $15.10. Okay, fine. What kind of premium can I get if I sell a covered call against it? Now remember, covered call, safest trading strategy is your safest trading strategy there is. I got to work on my punctuation. Not my punctuation, my pronunciation. You would think I was born in a barn. I grew up in a barn. Or raised in a barn. That's what my mother used to say. What, you raised in a barn? All right. The current price, $15.10. If I buy it at $15.10, I sell it at $15. Yes, I'm losing 10 cents right off the top. So you take that 10 cents off of the 45-cent premium. So I'm walking away with 35 cents on a $15 stock. Well, what kind of rate of return is that? Let's do one for the fun of it. Okay? Now, the numbers look good. What is the chart telling me? Well, the chart's telling me a year ago we're at 24. Okay? By the end of the year, last year was the high. We actually hit the high twice. All right, Parka, can you explain the risk with your strategy? What's the most amount of money you can lose on a trade? Ooh, Parka. Okay, I'm going to be totally 100% honest with you. Most people, when they first start trading, lose the most amount of money by hitting the wrong button. Seriously, it sounds silly, but you're going to be click, 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 and then you're going to hit send, and all of a sudden it's like, oh shit. It's happened to me 4 times this year, and I've been trading for 20 years. It does happen. That's the risk. One of the risks of investing online. You're going to, at some point in time, hit the wrong button. Okay. Other than that, now, here's the risk, and you tell me if you think it's real or not. Let's say, hypothetically speaking, you buy Coca-Cola. Now, Coca-Cola has been making Coca-Cola since the 1880s. That's 140 years. Okay? there is a slight possibility, the risk, where you buy Coca-Cola and they go bankrupt the very next day and you lose everything. There's risk there. But does that sound realistic? Okay? Coca-Cola has been making Coca-Cola for over 140 years. But the risk is there. You could buy the stock, okay? And the company could go out of business the very next day and you can lose everything. If you think Coca-Cola can do that, fine. Ford, General Motors, AIG, Bank of America, Wells Fargo, Procter & Gamble, Home Depot, Lowe's, yada, yada, yada. I can give you a list of a whole bunch of them that are over 100 years old. They've seen a lot of shit. World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash of 29, the market correction of 87, the dot-com bust of 2000, the financial crisis of 08, the pandemic of 2021. Yet you have a handful of companies that have consistently increased their dividends to their shareholders through all that bullshit. If a company continuously be profitable through all that crap and still increase their dividends, well, hell yeah, I got no problem putting my money there. But they do the exact same thing. They go up, they go down, they go up, they go down. So I look at them and I buy them when the time is right. Take a look at Kohl's. Look at the last 90 days. Up, down, up, down, up, down, up, down. And big drop right here. She made that big drop. Now, I already had Kohl's, but when it made this big drop, guess what I did? I bought some more. Reason being, because I believe, this is just my opinion, some people disagree with me, I believe that this right here, it happens a lot. The market maker is manipulating the information for his benefit. That's what I believe. The reason why I believe it, because the numbers are telling me more than likely that's what he's doing. Let me give you an example, okay? Now, Kohl's missed their earnings, so the stock dropped. But is that a reason to drop that much? Specifically, let's get out of here. Let's go to charts. Okay. Okay, here's a different chart. This chart, we're looking at this down here. This information. That is the average volume. Now, there's a few things you need to remember. One is the market maker's job is to make sure there are buyers and sellers. That's his job. He connects the buyers and the sellers. And his profit, how he gets paid, is what's called the spread. So when you see, let's go to the trade here for a second. Okay. When you see this right here, this information up top, okay, you have the opening of the day, the high of the day, the low of the day, the close of the day, how much volume there was, what is the current bid, and what is the current ask. Okay, the bid is what you can sell it for, the ask is what you can buy it for. Okay, you can't go to the farm and buy a gallon of milk. Nope, you got to go to the grocery store. The guy who owns the grocery store, the market maker, he buys the milk from the farmer at $3 a gallon. He sells it to you at $3.50 a gallon. His profit is the spread. Now, let's see what the spread looks like for the market maker. Now, the spread is usually 2 to 3 cents a share. It doesn't sound like a lot, but let's do some math, and you're going to be surprised, and maybe you will see things the way that I see them, or maybe what I say might make more sense. Let's take a quick gander. Okay, here's the last 90 days. Down here, see these little tiny blue dots? The blue bars? That is the average volume for that day. That's how many stocks have traded that day. Take a good look. Okay? The average volume for Kohl's is right around 5 million shares a day. That's the average volume. Look at the numbers right down here at the bottom. Okay, those are the average uh, volume every day. Each little bar represents a day of trading. So, how many shares traded? Well, on this day here, it traded, 4.5 million. And the next day, 4.6 million. Average is 5 million shares per day. So, if the market maker makes 2 cents a share and 5 million shares are being traded, well, some fancy little math, we go 2 cents multiplied by 5 million. If that's the average volume, right? So on average, the market maker makes $100,000 a day. Now, some companies have more than one market maker. I do understand that, but it is the market maker's job to set the opening price of the day. Every other number is created by us because we say where the high should be because we keep buying as it goes up higher and higher. We decide what's too high and we decide what's too low. What we don't decide is the opening price, and that's the market maker's job. He decides the opening price. Okay, so the average 5 million a day. Market maker makes $100,000 a day. Okay, lovely. Now, he gets a piece of paper right here, the date. I can't read the date, damn it. There we go. Okay, here's the date right here, 11/26, 3 days ago. The market maker gets a piece of paper saying, we missed our earnings. We didn't make as much as we thought we were going to. So the market maker takes that information and he decides to drop it from 18 all the way down to 14. Now that doesn't sound like a lot, but $4 on an $18 stock, well, that's over 20, wait a minute, maybe around 15%. Big drop. But that's not what you're looking for. You're not looking at the size of the drop. Okay, that's what other people are looking at. What I'm looking at is how much volume did he create with that piece of crap piece of paper. That's just my opinion. This is just my opinion. So he gets a piece of paper saying we missed our earnings. Great, what am I going to do with that information? He drops the price by $4. Now $4 on an $18 stock is a little bit less than 20%, a little bit more than 15%. But it's a big drop. Look at the volume. How much volume actually traded? 59.75 million. Let's get out the calculator. Okay. What did I say it was? That's funny. Okay. 60 million. Okay, so let's clear this. Remember, 2 cents a share. That's the first calculation we did, so we're going to do it again. 2 cents a share. Multiplied by 60 million. $1.2 million. So explain to me in a manner which I'll understand. Every day, on average, there's 5 million shares being traded. The market maker, he's the one person who sets the opening price. The opening price of the day is dictated by the market maker. So the market maker gets this little piece of paper saying, we missed our earnings, boo-hoo, great. He drops it down. The fact that he dropped it down as much as he did created a buzz, created a tsunami of people saying, are they selling or are they buying? So there's 60 million shares traded that day. Was that buyers looking to get a discount? Was that sellers panicking because of the drop? Doesn't really matter. Look at the end game. On an average day, market maker makes $100,000 a day. $100,000 a day. He gets one piece of paper. We missed our earnings. Boo-hoo. Now he gets $1.2 million a day. Which is more likely? Did he over exaggerate the drop that should have been? Should it really have been that much? I think he manipulated, but that's me. Okay, if you're making $100,000 a day on average, and then somebody gives you a piece of paper saying, oh, we missed our earnings, what you do with that information is going to affect your paycheck. How you doing? Can't read that. Roy? R-U-I? Roy? Is that how you pronounce it? I don't know. But that's my theory. Okay, does it make sense? Is it justifiable for the market maker to drop it this much? He could have dropped it just a little bit. I mean, they missed the earnings. Big deal. Okay, it happens. What we doing? Oh, we're looking at dividend stocks for a weekly cash flow. Simple, safe, predictable, consistent. 1% per week is what we're looking for. That's over 50% per year, but compounded, it's over 62. Wow! That's massive information. Yes, dude, a whole bunch. Okay, anyway. Let's get back to our stock list and figure out where were we before I went down that rabbit hole. Whoop-oo, I don't want that. Ooh, what the hell did I do? Oh no, what did I do? Right there. There we go, that's what I wanted. All right, back to where I was. Right there, there we go. Which Equitomi, that was Kohl's, KSS. The Hindenburg reports on them. All right, Tom. Beretta, yep, I remember that. Don't do the crime if you can do the time. All right, Nike. Let's take a look at Nike. N-K-E, Nike. Here we go. Okay, Jose. Jose, we can take a look at Nike. Yo, Jose, we're looking at Nike. Oops, let's change this back again. All right, there we go. The high of the year, 124, drops down to hits like that, 72. Okay, a year ago, we're at 124. Drops, sideways, big drop right around the Olympics. This is what happened right around the Olympics. I owned it back then, okay? I sold it, got my profit, thank you, all that kind of nice, neat, fun stuff. Last 30 days, that's my main thing. Last 30 days, what do we think it's going to do next week? Well, here's your last 30 days. It's a huge difference between looking at a year chart, 90-day chart, 30-day chart. Yeah, big difference. Look at 30 days ago, we're at 77. The bottom was at 72.50, the high at 80. She pulled back one day, 2 days to the upside. That could be a new trend, a new channel. Go trading range between, what is it, 77 and 79.50. That could be. Okay. That being said, well, it's a little on the high side because you high here at 79.80 looks like. And right now we're at 78, 72. So there's not much space to travel there. But look how much space down here. It looks, this is not guaranteed, it looks as if she should be pulling back. It just looks that way. Doesn't mean that's what it's going to do. The stock market's the funny thing. Nobody knows exactly. Anyway, that was Nike. Ooh, Kev. AVGO. AVGO. Okay, interesting. Okay, the high, low, where was it? Where is it? What's the movement? Up, down, down. It doesn't look like it's bouncing yet. Let's take a quick look at that one. Last 90 days. Okay, here you go, 90 days. Down, up, down, up, down, up, down, down. Yeah, it's actually coming down at this moment in time, which means it's searching for a new 30-day bottom. Okay, well, let's take a look. Last 30 days. Okay, here's your last 30 days. The chart looks so much different when you change from a 1 year to a 90 to a 30. Well, look, this looks like an invitation and a half. Okay, we're over here at 172. We drop down to 168, shoots up to 185, drops down, goes sideways, Now we have a new 30-day bottom, 30-day top, 30-day bottom, and now she's bouncing. Okay? So Wednesday was a new 30-day bottom. Friday, she's bouncing off that, going to the upside. Could it be the change of direction? Yes, it could. For me, I like 2 days to the upside. Well, it's currently at 1. Is it going to do it again? Don't know. Maybe it will. Maybe it won't. Don't know. We got people over here on Instagram. Mari X, how are you? And Coach Joel, back again. I must be doing something right, Coach Joel. Saturday night spending with me. I feel blessed to be in your presence. Thank you, sir. Let's keep on keeping on. Does seasonality play a part in your decision? Actually, yes, it does. Now, AVGO, it looks like a good place to jump into. Now, someone just asked about the seasonality for AVGO. Well, let's take a look. Now, for those you don't know what seasonality is, let's enlighten you. All the way to the left will be January 1st. All the way over to here, December 31st. So this is actually 1 year. But the blue line represents the movement for this year. The blue dot, that's where today is. Okay? The red line down here, that represents 10 years of data. That's 2014, 2015, 2016, 2017. 10 years worth of data, the average movement. Look at it from January 1st. Now look at December 31st. It's a slow, steady incline to the upside. So basically, what does that mean? Well, for the past 10 years, she's consistently gone higher from January 1st to December 31st. So it just goes up. Well, why don't you say that? Okay, it just goes up. Not huge, but very small. All right? You're not going to make enough money to buy a new yacht overnight. Doesn't work that way. This one is slow but steady. Remember the tortoise and the hare? You know, the tortoise is really fast but didn't win. The tortoise, it won because it was steady, consistent, and steady. All right, anyway. That's AVG. Oh, Ramsey. What's that? Ramseer 180 QYLD? No. SPMO. What the heck is SPMO? Have I ever heard of that one? I don't think so. SPMO. All right. SPMO. Oh, it's an ETF. Those things are usually a, oh, imagine that. It's a no. Okay? When I say I like weekly options, why are you throwing me something that has monthly options? Okay? No dividends, that's a no. No weekly options, that's a no. Just wasting our time. QYLD, hell no. QYLD. No, QLD. QLD, what the heck is that? Oh, it's a no. AVGO, we already did that one. T. Cole, hey James, thoughts on Whirlpool? Ooh, we haven't looked at Whirlpool in a couple of weeks. WHR, Whirlpool. Okay, first and foremost, the high of the year, 126, way there in last December. Say she drops, finds the bottom in May, late May, around 85. Shoots up, pulls back, shoots up, pulls back. It's not looking too good at this moment. I'm not even going to look at the numbers. I'm just going to show you what it's done in the last couple of weeks. Okay? What does that tell you? I think it's not that difficult. It goes up, down, up, down, up, down, up, down. And it's pretty simple. It's coming on the way down. James, welcome back. Noy, awesome. So the 30-day high, weren't we just talking about this? 30-day high, profit taking. It's going to find a bottom, then it'll turn around. If you like Whirlpool, well, let's take a look at it in 2 weeks. Just my assumption, 2 weeks. WHR. Okay, that will give it plenty of time for whatever profit taking that's going on to continue till it comes back down to this area here, which is, it's a nice steady upward trend. Man, it looks lovely. but it's pulling back. Okay, from here, 108 to 120, that's $12. That's more than 10% increase. Okay, 30-day bottom here, top here, bottom here, top here. You know, it goes up, profit taking, up, profit taking. That's what we're looking at. Having a profit taking now until it finds its bottom, turns around, goes back up again. We're just going to watch it. Terry, for 39 weeks, BBY revenue down 4%. Okay, Terry, you're under the impression that I'm buying to hold for a long period of time. BBY. Okay, BBY, what the chart is telling me, down, up, down, up, down, up, down. Now she's going up 2 days to the upside. Here's your 30-day bottom. Here's your 30-day top. Here's a gap here. Here's a gap here. Gaps have a tendency to fill. This thing's going to the upside. Fill in that gap here. 30-day high. Profit taking. 30-day bottom. Now she's going up. That's what the chart's telling me. Is it right? Only time will tell. Okay? So there's chances are 1 in 266 that it's going up. Chances are always 1 in 266 because your 30-day high, 30-day bottom, there's only 266 trading days. What is the chances of it going higher? 1 in 266. That's it. All right. So that's BBY. Sorry, Terry. I mean, even though the revenue is down, I'm looking for the buying and selling by the investors. That's me and you. We buy, we sell. That's what we're here for. Oracle, please. Ooh, I like Oracle. We're going to do that next. ORCL. ORCL. We're almost at 11 o'clock. All right. Tiki Taki, QDTE. No. XDTE. No. RDTE. No. Look at that. You get the trifecta. Tiki Taki. No, no, and no. Sorry. 86. Good evening, brother. AVGO, please. We already looked at that. Jeff, or go ahead and say, Jur the Viking. If you had 50,000 and never invested before, where would you start? I would start paper trading. You can go on Google and look under paper trading or what platform offers paper trading. A whole bunch of them do. Paper trades, kind of like Monopoly, but in the stock market. Okay, you buy stocks, you sell stocks, and a virtual account doesn't mean anything. It's not real, but you can learn skills from it. Now, I still, after 20 years of trading, I still paper trade. I still have ideas that I want to see how I can perfect them, how I can make more money safely. So I'm always doing something in a paper trading account. Okay? So that's what I would do first. But that's me. You have to figure out what works for you. Don't invest any real money until you're good at whatever trading strategy you pick, because there's a lot of them. Figure out what you want to do. What do you think the best place to put that 50,000? What is your end game? A lot of different questions there. Okay, Jose, Nike. We already looked at Nike. PNE, how are you today? I see you over there. Okay, so Nike, we already looked at that. BMO, what the heck is BMO or BNS? BMO, BMO. No, BMS. Oh, BNS, BNS. Oh, okay. No and no. Okay, the reason why, Mike, 71. The reason why I'm saying no is because it's a monthly option. Now, if you don't know the difference between a weekly option and a monthly option, let me just clue you in just a little quick. A monthly option, you can trade it once a month. Okay? It only trades once a month. Okay. Weekly options, every week. So here's the question. If you average, or if I average 1 or 2% every trade, okay, monthly option, I can do it 12 times. That's 12 to 24% for the year. And that's not bad. Not many people make 24% a year. Here's the flip side. Weekly option, 52 weeks in a year. Okay, 1 or 2% per week. That's over 50% to 100% per year. So ask yourself a question. Would it make more sense to do weekly options, not monthly? That's a question you need to answer. Me, it's weekly options. Safe, predictable, consistent, 1% per week. That's what I like. That's my goal. Many contracts going at the same time. Sweetie Swag, way to go. All right, what was that? YL9000. Hey, James, take a look at Intuit. Over 25 years, increasing in dividends. INTU. I'm afraid to hit the button because more than likely it might not fit. Okay, so let's take a look. $640 a share. That's why I've never traded it. Okay, whether or not they consistently increase their dividends, let's take a look at the numbers. Currently, the stock is at 641. 641.69. The closest strike price would be the 649 bucks. Look at the 642, $7. Nice. Either one of those will give you well over 1%. Oracle, then Bank of America. Okay, sit tight. I got them both written down. So, I appreciate your input. However, that's out of my price range. To be honest with you, it's out of my price range. I like $250 a share or lower. But that's me. What platform do you use? This is Think or Swim through Charles Schwab, and I also do Robinhood. All right. I am Chad Mitchell. How are you, Chad Mitchell? Top 5 symbols you suggest to look at to start like you. We will do our own research, of course. Interesting. Now, I can't tell you what to buy. I can tell you what I'm looking at. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then Warren Buffett's list. That's about 300 companies. I stick them into a calendar. The calendar tells me when they're going to pay their dividend. The dividend has a tendency to make the stock increase in value. By knowing that information, I do what's called a covered call. Simple, safe, predictable trade. Consistently, 80% of the time. Okay? Never buy a stock you don't want to own long term. Okay, we already looked at Nike. Why don't you set your strike price just a little higher within that 1 week option just to make more? Low J. All right, here's the reason why, Low J. Okay? I find it simple to make 1% a week. Okay? Because it got to hit 1% before it can hit 2, 3, 4, 7. It's got to hit it. Okay? You can't get to any other number without going through 1 first. So the odds and probabilities are higher that each and every stock will make 1% as opposed to 2, 3, 5, 7, 9. 1% a week for me is perfectly fine. Okay, I'm not looking to strike it rich. I'm not looking for huge cash flow. I'm looking for safety, simplicity, consistency, and what was that last one? Simple, safe, consistent, and predictable. Yes, that's what I'm looking for. I don't want risk. I want safe, predictable trades. Okay? I'm 60 years old. I've been working since 1973. I have no desire to go back to work. I'm actually enjoying my life at the moment. Okay? I like to think that, yeah, I'm officially retired. Okay? That was last November. It's actually been a full year. Okay? Thanksgiving, I came down for Thanksgiving to hang out with my kids, and I've been here ever since. Okay? That being said, Intuit out of my price range. Sorry. And why don't I do that? I already just gave you the answer for that one. Nike or A. Okay, Jose, we already looked at Nike, so let's take a look at Applied Material, AMAT. Applied Material. Low, high, where was it? Where is it? Look at the movement. Up, down, bouncing off of that. 174.99. The 175's 296. That's well over 1.5%. Cool. Tiki Taki, we already went through this like 5 minutes ago. Okay, QDTE, no. XDTE, no. RDTE, no. YMAX, no. Okay? I know they have weekly options. They don't have weekly dividends. Okay, some of them pay monthly dividends, but nobody has weekly dividends. Yeah, I do weekly options. Big difference. Okay, but no. That's 4. Last time you asked, it was 3 no's. Well, now you got 4 no's. Okay, they just don't work in this strategy. Okay, it's as simple. If now I'm coming to the conclusion, Tiki Taki, because this is the second time you did that. Is it a pattern? I don't know, but you gave me 3 stocks last time. Now you give me 4. All 7 of them are no, and here's the reason why. You're not looking at the consistency in which they pay their dividends, or other words, how consistently are they profitable. If they're profitable every single year, every single quarter, the numbers will consistently go higher and higher and higher and higher. But that's not the case. They go up, they go down, they go up, they go down. That's not what I'm looking for. I'm looking for consistent profitability. That means if they make a profit $1 per share this year, well, next year it better be more than $1. A year after that, it better be more than that. Then it better be more than that. If not, if they decrease their dividends even once, they get tossed off the Dividend Kings list. They get tossed off the Dividend Aristocrats list. And they got to start over from ground zero. Okay, year 0, then goes to 1 year, the 2 years, 3 years. You know how long it takes to get to 5 decades? That's 50 years. I won't be around to see it. Okay, I like consistently profitable and weekly options. So, Tiki Taki, no. All right, let's keep on going. How about Tesla, new phone? You know what? I'm kind of interested in see what the new phone looks like and how well is it? Is it compatible, okay, with what I'm doing? Or do I have to change everything all over again? Okay, but Tesla's a no because they don't pay dividends and they don't share their profits. How does PE affect your trades? Not at all. You're on fire today. Well, Alex, thank you for that. Bonjour, très bon corps. Ah, merci beaucoup, bonsoir. Amusez bien, bonsoir, bienvenue, all that kind of stuff. No nickname, Tiki Taki, and have paid dividends for 20 years. Ooh, imagine that. Jack Lack. Hi, Dollar General, please. Why are the premiums so high? Usually, when you see high premiums, 1 or 2 things. Okay, 1, it's a new company trying to attract buyers. Some buyers like high dividends. Great. Big dividends, you're going to attract more buyers. That's one reason. Second reason could be that the earnings report is coming out. If it's good earnings, is it bad earnings? How is it going to affect the stock? Premiums are usually higher just before earnings reports. Mr. Miyagi, how are you today? All right. Dollar General, let's take a gander. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, big drop, down, bouncing right here a couple of weeks ago. We're currently at 77.49. The 78s are going, holy shit, those are big. That's like 4 or 5%. Wow, I like Dollar General, I do. Okay, but let's write it down for next week, and we will take a better look at Dollar General. Oh, I already have it written down. Imagine that. So more than likely it is because of the dividends or the earnings report is coming out. But let's see what a trade would look like. Okay, last 30 days. Let's get this out of the way. Last 30 days, right here. Look at that movement. Come on, you got to admit that looks good. 80 bucks, shoots up to 84, drops down, back up, back down, back up, back down. Now she's going back up. 2 days to the upside already. That's what I'm looking for. New bottom, 2 days to the upside. Now, come Monday, I will take a look at it. If she opens up higher, then I'll jump in. If she opens down lower, well, then this is not the 30-day bottom. Okay? Low J, ordinary income tax rate. I feel bad for you, brother. You really need to talk to a tax strategist, because if you're paying taxes on your income, on your trading, you need to figure out a way to pay less taxes legally. Got to throw that word in there so I don't get myself in trouble. All right. Do you consider short-term capital gains tax? Low J, no, I do not. Okay, it's your responsibility to set up your account so that it is favorable for whatever you want. Me, I prefer not to pay taxes, so my accounts are set up in a manner in which I don't have to pay taxes legally. Okay, so you have to talk to a tax strategist about that. Ordinary income tax rate, blah, blah, blah. JLAC, they report earnings next week. That's probably what it is. Nike, MAT, where I looked at that. ENB, isn't that Enbridge? Hold that. ENB, Enbridge. Oh, wait a second. Wait. Oh, damn it. I was going to do a covered call on that and show you how it worked. Well, we've already seen one. All right. ENB, no, it's a monthly. Okay, I don't like monthly optional stocks. You can only do it once a month. Once a month is what, 12 to 24% a year? Yeah, no thank you. Dallas Guns, I'm a paid member for several months now. However, I'm not getting the Sunday weekly emails. Please help. Okay, Dallas, send me a text here. Go up to the bio, send me a message, and you and I will chat, all right? What am I looking at? Are you trading in a Roth? Oh, Parker, yeah. You got to talk to a tax strategist. Set it up that works for you, okay? How's Coin? I don't do coins at all. AIG, earnings per share growth, expecting 4.87% loss in 2004. Well, Terry, thank you for that. I don't know what we decided on AIG. Hold on a second. Hold on a minute. Before we go much further, give me a dime. It's not on my list. Okay? All right. All right. 86. DG premium was at high last week too, so I thought they were always that high. No, they're not always that high. Would you mind predicting XRP? Yeah, I'll predict XRP in about 18 years. I like 20 years of consistent profits. XRP has not been around that long, so it's a no. I'm terribly sorry because, I'm very picky of where I put my money. Now, XRP can be the next great thing. It could be the next sliced bread for all I know. I'm not willing to take that risk. I'm retired. I have no desire to go back to work. What if XRP is not the next sliced bread? What if it goes the wrong direction? I'm not willing to take that chance. I want to put my money on a pony that is consistently winning. Okay? Johnson & Johnson, they've been in business for over 100 years. They've increased their dividends to their shareholders for more than 5 decades. That's a company I want to take a look at. Okay? REYN. REYN. Reynolds Consumer Products. It's a monthly, it's a no. Sorry. Jalak. It could be because, okay, yep. Jalak, blah, blah, blah. What are the best website apps to trade on? Xavier, how are you today? Now, Xavier, I know nothing about you, so I cannot give you any advice because whatever advice I'd give you would be as if you were me, which you are not. So I have no idea what you're looking for, no idea what your plans are, no idea what your goals are, no idea. I don't know anything. I cannot give you that kind of information. Okay, you got to figure out what it is you want to do. Why are you here? What are you looking to do? What is your goals? What is your risk factors? Okay, what are your expectations? All these kind of questions. Maximus, what looks good for Monday? Pizza. Pizza looks yummy for Monday. What's up, Noah? Oh, look at this. NWN, Northwest National. They are Dividend King. They have increased their dividends for more than 5 decades. Great company. However, they're a monthly optional stock. NWN doesn't have weekly options. No weekly options? No, thank you. Alex, thank you for that. Not getting the weekly stock email. Okay, Dallas Guns, you already said that to me. I got it. Send me a text message. Dang. Hey, Parka, it is what it is. It's a great company, don't get me wrong. If you're okay with 12 to 24% a year, that's a good pick. Really, it is. It's a great company. It just doesn't work for me. All right, Dallas, don't put your phone number here. Okay. Uh-oh. I missed that. Wow. I missed all these questions. All right. Whomever wondering about Apple, it's overpriced at the moment. Doesn't mean it won't go higher, though. Yeah, you're absolutely right. No, you don't, Alex. I have no idea what's Alex trying to do. Alex, I don't want to hit the wrong button. And Terry, I hit the wrong button before I lost 1,500. It does happen. You know, and you think about it, we're all adults. And we think we know where the keys are. We know where the buttons are. Our eye-hand coordination. Just once in a while, hit the wrong button. It happens. All right, let's keep on going through these questions. Kohl's looks book value share 35 bucks. Okay, thank you for that. Fish, what's happening? Overbought or oversold confessions? Okay, George, thank you for that. Insider info? I don't think so. What's up, Fish? Applied materials? We already looked at applied materials. Can you name the 5 most favorite dividend stocks of mine? I can tell you my 5. I can't tell you everybody's. I like Nordstrom's, Kohl's, Macy's, Ford, General Motors. How about 4 years ago? Dude, really? I can't even remember last week, and you want me to remember 4 years ago? Do companies change weekly? Yes, they do. Pepsi, Parka, Pepsi has crappy premiums most of the time. Okay, well, here's the stock. Wait a second, let's take a good look at that. Remember how I tell you stocks go up, stocks go down. They go up, down, up, down. Perfect, that's a whole year. That's Pepsi Cola the whole year. Look, up, down, up, down, up, down, up, down, up, down. That's what they do. When in 90 days, what does 90 days look like? More of the same. Up, down, up, down, up, down, up, down. But slowly going toward the downside, though. All right, great. The last 30 days. 30 days. That's the past 4 weeks. Okay, they're getting smaller and smaller. But look, up, down, up, down, up, down. Same thing. Up, now here's the high here. Now she's coming back down again. It's not that difficult. It's not brain surgery. What? No crystal ball? Alcon, of course I have a crystal ball, dude. All right. Do the companies change weekly? Yes, they do. Walmart. George wants to take a look at Walmart. WMT. Well, that's a hell no, brother. Look at it. It's at the high of the year. Now, if you want to buy at the high of the year, more power to you. I wish you luck. I really do. Okay, I don't buy at the high of the year. Have you ever heard somebody say, hey, this stock looks great. Let's buy it at the high and wait for it to go higher? Yeah, no, sorry. I buy at the low. Look, up, down, up, down, up, down, up, down, up, down. That's what it does. Right now, it's at a high. So eventually, it's going to stop going up, come back down, turn around, and go back up again. Usually, that's what it does. If that's what it's going to do, fine. That's what I want to take a look at it. Not this week. Okay, I'm going to give Walmart 2 or 3 weeks to come off of that high. I'm saying 3 weeks. New to list. WMT. Walmart. Oh, Parka. Altria. Really? Whoops. Whoopsie. M-O, Altria. Hell no, dude. Look, same thing. It's at the high of the year. No, I don't buy at the high of the year. You know that. Dow. Ooh, didn't we take a look at Dow a while ago? Yesterday, I think it was. Okay, here we go. Dow. Here's the high of the year. Here's the low. Here's where it was a year ago. Here's where it is now. She went up. She went down. She went up. She went down. Right here now. Still learning. Thank you. Okay. Last 90 days. Same thing. Here's the high. Here's the low. Where it was, where it is. Look at the movement. Down, up, down, up, down. Okay? Last 30 days. Okay? Pretty easy to see. Here's your 30-day high. Here's your 30-day bottom. Look, she went down, retraced, came back down again. Here's where we are now, coming in a down cycle. I like to wait for it to stop, turn around, go back up. Jose, we already looked at AMAT, Applied Materials. We looked at it about 15, 20 minutes ago. Nike forecast earnings for 2025 down almost $3 billion. Okay, Terry, I got that. I don't own any Nike at the moment. I bought it, I sold it. Okay? So we're looking at Dow at the moment. Dow is going to be a no for this week because she's in a current downtrend. But we'll write it down for next week because look how close she is to the 30-day bottom. So it might be a contender next week. But not this week. Alrighty. Applied Materials we looked at. SPY going short. 19 raw. You have fun with that one. What's your 5 favorite dividends? We already said that. Applied Materials, we already talked about that. AGNC, we are Class X, already looked at AGNC. Jose, we already looked at Applied Materials. You should have bought into UMAC on Wednesday when I told you about it. You'd be very wealthy now. I'm wealthy enough. Thank you kindly for your concern. How are you doing, Yusuf? How are you today? Namaste. All right, XRP, no. XRP isn't a dividend stock. See, someone's paying attention. That's a good thing. No dividends, no thank you. No weekly options, no thank you. It's pretty plain and simple. You know, the rules are easy. Yeah, Terry Smith, Applied Materials does look good, but we already looked at it. The information's already there. This is being recorded, so if you want to take a look at Applied Materials, go take a look at the recording. Let's keep on moving. What about AGNC? Class X, we already looked at that. Is the situation with Kohl's reason enough to avoid stocks ahead of earnings? Not all market makers do that. Okay, you take a look at some of the stocks, you take a look when the earnings come out. Are they positive? Are they negative? How does the stock react? Some stocks react crazy because the market maker does whatever he thinks is best, or she. Equal opportunity here, you know. Hey, brother, are you holding RISMAS coin? No. DJT, we'll look at DJT in about 20 years. Okay, they're not paying a dividend as of yet. Kind of thought I was looking at Tony Hawk. Well, it is Tony Hawk. I just parted my hair differently today. Are you holding RISMAS? No. Corona, do you sell right before a dividend date or after? I prefer not getting anywhere near the dividend date. Now, I trade basically companies just before they pay their dividend. Okay? Take a look at Cardinal Health right here. It's paying a dividend on the 2nd of January. Okay, next year. first week of the first quarter of 2025. Okay, Cardinal Health, if I wanted to collect the dividend, if I wanted to put this in play, if you will, I would buy it 2 weeks before the dividend date on a Monday. Reason being, stocks have a tendency to increase in value before the dividend date. Knowing that, what do you do with that information? Well, if I know the stock's going to go up, why not buy the stock? Okay, well, how much am I going to make there? I don't know. Well, I like consistency, predictability, and safety. Well, what's a safe trading strategy? The covered call is the safest trading strategy there is. And, Colgate Palmolive CL. We'll take a gander. So if covered call is the safest strategy, and I can make 1% every week using the calendar that tells me when the company is paying a dividend, the chart to tell me when's the right time to buy, okay? Stocks go up, stocks go down. Well, as they come down, they hit bottom, they turn around, go back up again. So if the chart is telling me it's the right time to buy, and you got the dividend coming up, and the premium is more than 1%, well, I like having all the odds and probabilities and the other factors in my favor. So yeah, I look at the dates, the calendar, when they're going to pay their dividend. Then I look at the chart. Is it the right time? Do the numbers work? Am I making my 1%? These are questions I ask myself every week. You should have bought UMAC. Yeah, sorry, dude, didn't hit my list. Dollar General, we already looked at that. What about AGNC? We already looked at that. Ooh, Gen Xer 99. Gen Xer 64. British Petroleum, let's take a gander. A gander, a look, a peek, a peep. British Petroleum. Interesting. Wow, look at that movement. Here's the high, here's the low, here's where it was, here's where it is. Look at it. Down, up, down, up. Okay, simple. Look at the last 90 days, because the last 90 days looks a little bit different, but not really. Okay, here's your high, here's your bottom, down, up, okay, basically the same for the 90 days. Big difference between the 1 year and the 90 day, but kind of the same, down, up. Okay, basically that's where she's going. Last 30 days, what can we expect from this thing the next week or two? The next week or two, that's pretty simple to see. Okay, 30 days ago we're at 29.20. She jumped up, pulled back. There's your high, there's your bottom. Where does it go next? To the upside. Well, that's where it's going. Up, pulled back, up, pulled back. Now she's going up. 2 days to the upside after this bottom right here. Well, that makes sense. But what does it normally do this time of year? For that, we want the seasonality. What does this stock normally do? Well, here's a dot, tells us where we are. And what do you think? Well, we lined them up, lined the crosshairs up. Look, she's going to go sideways for about 2 weeks. And then she's going to slowly drift down before recovering again. Not a lot of movement. No big highs, no big lows between now and the end of the year. Is this guaranteed? No, not at all. It's just, what did it do? It's like driving down the road looking in the rearview mirror. This is the rearview mirror. What did the stock do the last of the fourth quarter every year? Well, basically it just goes sideways. No big moves up, no big moves down. No surprises. That works for me. Wade Construction, do I have XRP? No, why would I have that? The FOMO on XRP is wild. Yeah, you won't catch me doing it. I like AGNC. Yeah, I like it too. Oops, I missed some questions. XRP, who has weekly dividends? Nobody has weekly dividends. I got 200% in a month on XRP. Well, good for you. Okay, the situation on coal's reason. Okay, got that question. Got that question. Yep, got that question. Got that question. Let's keep on going. Keep on going. Okay, Wade Construction, you got 200% on XRP in 1 month. Well, good for you. It has been nice to have XRP. Wade Construction, no dividend stocks. Yep, got it. Class X, who has weekly dividends? Nobody that I know of. I used my covered calls to buy XRP. Well, cool. Have you looked at Dow recently? Yep, we looked at it about 5 minutes ago. AGNC, system finally sinking in. Oh, cool. Finally sinking in. Cool. Ben, how are you? Show profit and loss. Ben, I showed that every once in a while. Hold on a second. Whoops. Let's get out of this. To there. Back to here. Skip all the XRP comments. Yeah, I take it for that one. Okay, somebody wants to look at the P&L. All right. Oops. All right, there's the P&L. You see the top right here? Okay, the parentheses means it's a loss. Okay. 1, 2, 3, 4, 5, 6. But it says year-to-date profit and loss. 1, 2, 3, 4, 5, 6. But I still own all 6 of them, so it's not a loss. It's not a profit till you take it. It's not a loss till you take it. Rule number 1, never buy something you don't understand. Rule number 2, never sell for loss. This account here, 0 losses for the year. Okay, hope that satisfies you. Let's go back to where we were. All right. Who does weekly options? Nobody does. NUE, PPG, and Target. Maximus. Those are 3 good ones. Now, we're down to our last 5 minutes, and I got a whole bunch of questions to go through, so I'm not going to be able to take a look at those. But if you come back tomorrow, we're going to do the exact same thing again tomorrow. I will look at those 3 tomorrow. NUE, PPG, and TGT. Ooh, I'm really kind of interested in Target because they had that big drop also. Okay, NUE, PPG, and T. Whoops, come on. TGT. All right, cool beans. Thanks for doing Dollar General. I didn't mean to ask twice. Okay, you know, you're new here. Perfectly fine. Now, new people have a tendency to think that I'm ignoring their questions. I'm not. It just takes time. And I stop all the questions. So they stop and I go each one individually. And I try to answer each and every question before the night's over. We got 4 minutes left and I'm going to finish up the rest of the questions. We're not going to look at anything else because I don't want people to think I don't take their questions seriously. Okay, so Mr. Taylor. How are you tonight? All right, anyway. All right, thoughts on XLM and XRP? No and no. Okay, I don't do cryptocurrency at all. How many stocks have dividends like numbers? Okay, Danny, I'm not quite sure what you mean by that, but there's over 4,500 different companies that actually have dividends. I only like about 300. Pizza! Boycott Pepsi, okay. VKTX. I've been on it for a while now. Never heard of it. Why boycott Pepsi? Okay. Dow is tricky. I can't figure that one out. I don't even bother. It's not on my list. Oh, PLTR. Nope. PANW. Nope. That's 2 in a row. Okay, Gerson. You want to take a look at Spider. SPY. Dude, I'm going to ask you something, and you probably don't know the answer, okay? Can you tell me how consistent has SPY increased its dividends? Has it been a decade? Has it been 2 decades? Has it been 3 decades? Now, second, can you tell me what the current yield for SPY is? You tell me those two answers, and we'll take a deep dive into Spider, and I'll give you all kinds of nice information on it. Okay, Simon, you keep skipping my question about Rio Tinto. Please, I'd be interested to hear my thoughts. Rio, R-I-O, R-I-O. I feel bad, Simon. You ready? Here's my thoughts on Rio. No. I like weekly optionable stocks. There's 52 weeks in a year. If I can get 1% every option trade that I do, 52 weeks means that's 52 times. Compounded, it's 62%. 1% a week, compounded weekly, is 62% for the year. Now, Rio Tinto has monthly optionable stocks. If I'm getting 1% on average per each option, monthly means 12. That means I'm getting 12%. So I'm not quite sure, Simon, why you would prefer 12% over 62. Rio, that's a no. Parker, you're absolutely right. Rio is a no. Sorry, dude. Okay? It's not that I'm... Well, yeah, I am. I don't care about it. It doesn't concern me. Weekly options only. I don't look at monthlies because I find it's a waste of my time. I'm not going to trade it no matter how wonderful the chart looks. That's not what I'm looking for. I'm looking for simple, safe, predictable, consistent 1% per week. I can't get 1% per week with a monthly option. Monthly options, always a no. Thoughts on Zim? That's a no. Simon Broderick, we're saying the monthly up, but is going to calls next week though. Okay, I have no idea what that means, but okay. Oh, it's 11:30. I'm gonna turn into a pumpkin. Woohoo! I'm gonna go through the rest of the questions, and we're just gonna chill for the rest of the night. What platform are you using, Mr. Bubbles? I use Think or Swim, which is owned by Charles Schwab. Okay, Yesef, Rio is a no. Sorry. And I also use Robinhood. I like the fact I can just do it with my fingertips. Jordan, if you invest $500 in a stock for 50 years, grows 10% a year, it's 500%. Does it only grow to 300? No. Jordan, you know what? Jordan, ask me that exact same question tomorrow. I have something really cool to show you. Have a great night. Parker, you too. Okay, seriously, Jordan, awesome information. That's a good question. It really is. I want to show you something tomorrow. So come back tomorrow night. I'm here at 9 p.m. to 11:30. It's currently 11:31. Trick question. Jordan, no, it's not. Mr. Bubble, I thought they got rid of Ameritrade. They did. Jack Bauer, dude, just getting ready to sign off. I'm done at 11:30. I'm here from 9 until 11:30. Just getting ready to leave. QQQVOO, a better option than Spider. You're right, Black-Eyed Joe, but I don't like any of them. All three of them, no, no, and hell no. Are you ready to Michael Douglas? Somewhere in the tree. Easier to follow weekly, seems like. It is easier. Eastern Standard Time, that's correct. That's it. That was the last question. Woohoo! Alrighty, you guys, again, same bat time, same bat channel tomorrow night. Good night. I'll catch you guys again tomorrow because the sun will come out tomorrow. Wipe away the cobwebs and the sorrow till there's none. Just thinking about tomorrow. Oops, hit the wrong button. Over that way, down this way, and come on. Come on, come on, come on. Now touch me, baby.